All right, welcome back, guys. Now, this strategy is so good, so good. At first, I didn't even wanted to share it online publicly for people because I do have a mentorship program, right? I wanted to just reserve it for only people who are already in the mentorship team. But somehow, I just feel like to share it with you guys so that you can start working with it from this moment after watching this video. Like as I said, the strategy is so powerful that you can get funded in less than 3 days only applying this simple strategy I'm about to give to you guys because of its risk to reward ratio. That is why it's so powerful. Now, looking at my chart right now, this is the general framework of how this strategy work. I know somehow most of you guys watching me right now, you have watched other videos on YouTube regarding liquidity, how to trade with liquidity, but this very one, you can't joke with this one because this one is the most powerful out of them all. Now, the way it works is very simple, all right? All we just need is price to first of all initially trade above the previous day's high and then a reversal. Now, from this point to this point, there are a lot of things going on at the background, which you are going to learn in this video, because it's not just enough for you to wake up in the morning, wait for price to trade above, and then be looking for a selling opportunity, which means you are already anticipating a reversal in the market. It's not just enough because if you have that mindset, you're going to lose so much in the market because obviously the market can trade above previous day's high like this and then keep pushing up for the rest of the day. So there are rules of engagement which you are going to learn in this video. But trust me, once you get this information correctly, trust me, nothing can stop you again in this market. So what we're going to do, I'm going to first of all explain what is going on here and then the transformation that takes place that lead to this very part. And then the end of the day, the market close as a reversal. On lower time frame, this is like an illustration of what's going on lower time frame. But the most important part of this strategy is these two illustrations you are seeing here. From this segment to this segment, that's all you need. Then you use lower time frame for your entry. You are going to see it on every market, every asset class. You can see I'm on SA US dollar right now. You are going to see it on all this market. And I'm on daily time frame right here because we are dealing with daily time frame candle, right? You can see before this reversal here, take a look at what I'm showing you guys. You can see before this reversal here, this is the last day candle, the previous day. Then this one traded, cleared this liquidity, and then a reversal. And that's what led to this reversal here. Now, the beauty of this strategy is that, obviously what we trade as traders is either you are trading continuation or you are trading reversal. You can get on the move as early as possible. That is the beauty of the strategy. For example, this move started from this level here to this point, okay? Now, some people, they are going to wait after the reversal has completed. That means after price has closed above this candle, right? Let me make it very bold. So after price has closed above this candle here, this Wednesday, 14th of May, and it closed with this candle here, all right, this one. So some people, the only part they are going to partake in is just this day, all right, this one, and this one. Let me make it bold so that you guys can see, right? This one, and this one, because they need to wait for price to close above this one. This is what the regular trader will trade, but you that is watching me right now, you are going to be better than that trader because you can get on board as early as possible at this point and then drag it all the way to this level. And if you take a look at every other reversals in the market, for example, this very one, you can see the price traded below and then take out this liquidity here. You can see this sell side draw liquidity, and then that's what triggered the reversal. It's like that everywhere in the market. You can see this very one here. You can see this very one here. This is the most recent market, and I posted it on my Telegram platform because you can see at the moment price trade below this level of the day and then rejected. That was when the reversal began. It's always there, not just for bullish scenario, both for bearish scenario. If you can see this very one now, you can see the moment price traded above this high here. Okay, this for bearish scenario. Then the reversal began and then traded back into the range. So it's always there in the market back to back. After watching this video, you can come back to your chart and then take a look at what I'm talking about. Now, how do we benefit from it? All right, because this is what leads to a reversal in the market. What do you mean by a reversal? Price is trading to the upside like this. All right, and all these candles are bullish candles or mixture of bullish or bearish candles, and then it's going to get to a point like this very level here, and then there's going to be a reversal in the market. Now, how do we anticipate this move? Because if you can anticipate this move, obviously your risk to reward will be very big. That's why I said you can get funded as quick as possible, just knowing how to trade like this. All right. Now, what is going on here? Let's first start by the interpretation. All right. First of all, I want you guys to understand something. The previous day's high of any candle or the previous day low of any candle, that is where the business of every trading day is. For example, that is what the target of every new trading day is. This is what I'm talking about. if we have a typical candle like this, all right, let me use bearish scenario like this now, and then this is the high and this is the low, okay? Now, if we have a candle like this, all right, with the wick, the high and the low, now all the liquidity that is associated with this trading day, everything is resting at this low and obviously this high. So this is where each new trading day, for example, this is the previous day, right? Each new trading day, this is where the target is going to be, all right? Either the low or the high, because there are a lot of volume at these levels. Sometimes that's why you see that because target usually means this is what we are targeting for the day. That's why sometimes when you see that price have traded above it, all right, let's say for bullish scenario, okay, let me make it a bearish scenario. That's why you see when price have traded below it, then the job of the day is done, which is this very one. Now, if the market want to continue on that same direction, for example, bearish direction for a very long time, they won't come back to trade back into the range anymore. Instead, they will close below the liquidity here. And you know what that means? They will engineer another liquidity here as well for this current day. And obviously, you know the liquidity will still be resting below here. Then this current day is already completed. The next trading day, the target is still going to be the same, all right? Trade below this liquidity. You know, like as I said, if the direction want to still continue on bearish for some couple of days, they will close below it and then not trade back into the range. They will still hold price at this level, okay? They will still hold price at this level. Then liquidity will still be here. Then the market will get to the point where there's definitely going to be a reversal. That's how this market operates. If not, your market structure won't be structured. For example, the bears will come in, the bulls take over, the bears come in, the bulls take over. All this turning point here, 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 here. That is what we are talking about in this video. So what actually happened is that for there to be a reversal, all right, for you to know that there's going to be a reversal, for you to catch it, this is how it works. The market will come back, open at this level, take the liquidity, because I've told you guys the previous day high, previous day low, that is the business of the day. That is usually the target, okay? Only when price want to continue on that direction, for example, this bearish direction for some while, that is when they will now, okay, trade below it and then still close below it, because the sell side business is not completed, all right? Now, when they know that, okay, at this point, we want to reverse this market, all they need to do is, okay, but before we reverse it, take out everything that is resting here, all right? Take it out. Once you are done taking it out, that's what you guys saw here, this illustration, all right? The market, first of all, open, come back, take out this high. So once they are done taking out this high, this level here, you know what's going to take place next? Trade back into the range. Hold on, let me change this color to bullish color. Trade back into the range. And listen to what I want to explain to you guys here, all right? When the market trade back into the range, there's going to be a wick at this point, indicating that the job of the day is done here. The market is no longer coming back to this level. Now, how this candle close, all right? How this candle close determine if actually a reversal took place, because there are some conditions in the market. Price will trade back into this range and then unable to close above this previous day candle, all right? If it's unable to close above this previous day candle, that means there is no reversal yet. That means the price is still within this range. Now the direction of the market has not changed yet. All right, get this point very clear. The direction of the market has not changed yet. Just that the job of the day is already completed. The fact that the direction is still bearish at this point, this is still going to be a target, all right, for the next trading day. But note this point very well. If the market close above this place, if the market close above this high, then of course you know there's a liquidity here, though I didn't indicate it. That means price have seek both side liquidity. Price have seek the low, that was their first target, and then they have taken out this high, this draw liquidity, this buy side. Now, at this point, a reversal have taken place in the market. My job here today is to teach you guys how to engage on this move. You know, whether it's going to be a reversal like this or also close within this range, it doesn't matter. My job is to teach you how to partake on this move so that you can partake on any day price action, be it continuation, be it reversal. So this is how we do it, okay? First of all, there was one video I created where I was teaching you guys how the daily candle, you know, the nomenclature of the daily candle on lower time frame. This is how it usually is, all right? Price will come back, take out both sides of Asia session liquidity. This is Asia session, and then they will reverse like this. This is the daily candle operation, okay? Now, this does not necessarily have to be a reversal on daily time frame. What I'm talking about is that this could be just be a continuation from previous day. Then this one trade back again, print the low of the day, and then continue pushing to the upside. So it does not necessarily have to be that the previous day was a bearish day. The previous day could be bullish as well. But what I'm trying to point out here is that this is usually lower time frame nomenclature for daily candle. But there's a point I want you guys to note, all right? And that is this place here, this low, all right? This low is our interest, low of the day. That is our interest. Now, the low of the day is usually printed during the London key zone. That is why this strategy is powerful. So that actually means that for this to be a reversal for us to engage, this must be during the London key zone. Now, I want you guys to understand this thing very well. This candle open at this level initially before trading to the downside, okay? And obviously the direction is bearish, okay? Now, this is where the candle opened, all right? Because it has to open at the close of the previous day. Now, normally, the way this market operates, price is supposed to, first of all, trade into this range as a bullish price action, then form the high of the day during the London key zone, which means high of the day is supposed to be formed here, all right? Then before trading to the downside. That is how this market is supposed to operate, all right? Now, I hope you guys are getting this thing very well. That actually means that this is supposed to take place, this move is supposed to take place during the London key zone, okay? Trade into the range during the London key zone and then form the high of the day before expanding to the downside. Then we know that, okay, we can continue on this direction continuously. That is what you guys saw with all these continuation, one, two, all these ones. Price traded above, print the high of the day, and then come back to seek the target, which is this one, all right? Then the same thing for this day, price open here, trade above, print the high of the day, then before coming back to seek the target, which is this one. Now, on an exemption whereby price didn't go for the high of the day, like go for the high of the day during the London key zone, instead traded straight to the downside from the opening of the day, all right? Traded straight to the downside and then take out the target, because this low of the previous day is usually the overall target of the whole day. So if price take it out as early as possible just during the London key zone, that means there is something that the market want to do. If they just come back here, take it out as early as possible during the London key zone, that means there is high chances for them to be a reversal, because obviously during the London key zone, price have already done the job of the day, taking out the target, which is this low, and then it has printed the low of the day at this point. So there's going to be a reversal. Our goal now is how to plug into this move during this whole process whereby price is printing the low of the day. That is when we now switch to lower time frame. I'm going to switch to lower time frame and show you guys how to plug into it. But I hope you guys understood this whole explanation, so that in case we go to lower time frame, it will be very, very easier. All right. Now I'm going to go to lower time frame. But before I go to lower time frame, I'll show you guys example on the chart, okay, using this same asset, NAS 100, I said NAS 100, I'm always on NAS 100, using this SA US dollar, okay. Let me go to 1 hour time frame or 30 minutes time frame. All right, so for the examples, I don't even know where to start from, but we can just start from somewhere, all right. All these ones are continuation days, continuation until, okay, there's a reversal here, all right. One thing you need to know is that, first of all, always note where the previous day's high is or previous day low for a bullish reversal. Now, for this example, previous day high is already taken out even before the start of the day, because this should be the previous day's high. New York session should print previous day's high. So without me going to daily time frame candle, I know obviously this is, of course, the high of the day that was printed yesterday. Now, Asia session just came in, took out the liquidity. Now, I've told you guys, the previous day's high is usually the target, all right? And once the target is taken out, the job of the day is already completed. Now, if the job of the day is already completed, what would price be doing? All right. Now, the only condition whereby, let me draw it out for you guys. Let's say this is the previous day candle, all right? Because sometimes price may not actually come back here, take it out before reversing. Now, there are conditions whereby it goes like that, but for there to be a condition whereby price doesn't take the previous day's high before reversing, then that means from this level of opening to this place must be very, very, very big in terms of above 50 pips, 60 pips, 70 pips, 80 pips, or 100 pips. So on that condition, price just from the opening of the day and then keep trading to the downside. Now, if the previous day's high is already taken out, the job of the day is already done. So possibility for a reversal is very, very big. All right. Now you can see what I was explaining to you guys. Price came back during the London session, print the high of the day, take out all the Asia liquidity, because since Asia have taken out the liquidity of the previous day, now all the whole attention has shifted to Asia liquidity. Now price took it out and then started coming downward, and then eventually became a reversal in the market. Let's take a look at other days. This is a continuation day, all right? There's no reversal here. This one too is a continuation day. There's no reversal here. If you're looking for a strategy to trade continuation, it's very, very simple. I've done it here on this YouTube channel. Very, very simple. Now let's take a look. This is where price printed the low of the day, and then there's a reversal to the upside. But what about the previous day's high or previous day's low? Previous day is this one here. Okay, this particular one. Okay, let's check why price was unable to come back to seek it out. We can measure it if the volume is too big. Let's see. Okay, this is almost about 2,500 pip, almost 3,000 pip. All right. If it was on Euro USD, GBP USD, or any of these currency pairs, it would be very, very easy for price to trade lower, seek out this sell side draw liquidity before the reversal. But because of all these assets, they are very, very big in terms of the volume. Now, once you have this key, all right, you have this knowledge, you can merge it with your continuation trading strategy. So you can trade any day, any price action that present to you on each trading day, be it continuation, be it reversal. Now this one, there was a reversal here, but it was a minor one. In fact, it didn't lead to a reversal because the market closed within the range and then unable to take out this high. Though price closed within the range, like from what I was explaining to you guys in the beginning, you can also consider it as a reversal. All right. Now I think that was even what led to this whole reversal here. Okay, this whole one, this very one, because for price to come back here to take out this, this sell side draw liquidity from this point, this will be almost more than 3,000 pip as well. So this is 4,000 pip. So it's going to be very, very big for price to do that. Okay. And so we can also look at more reversals in the market. Price need to take out. Now, what I'm going to do now is let's take a look at how we can engage it. Okay. Now, how do we engage all this reversal? That's the next thing I want to talk about. Okay. How do we engage it? It's very, very simple. Like the same way we engage continuation, like all these days are continuation direction, all of them. Continuation, continuation, all of them are continuation. Now, the same way we engage continuation is the same approach we engage reversal. Now, for the engagement, we use lower time frame like 15 minutes or 5 minutes. Now, from the start of this video, remember, I have not really talked much about this lower time frame because I reserve it for the entry purpose. It's very simple, okay? All you need is for price to first of all fulfill all these conditions I just gave you guys. Trade below the target, and then during this London key zone, print the low of the day. Then once price is below this level, let me use this here as example. Okay, for bullish scenario. The moment the market is above like this, all right, during the London key zone here, all we need to do is switch to lower time frame. Now, remember I told you guys there are some conditions whereby you are expecting a reversal and the market will just close like this bullish without a reversal. All right. How do we know if there's going to be a reversal? Once you go to lower time frame, from here, from the open of the day to this point, the market has been going from bullish like this on lower time frame. That's how it's very simple and very powerful. Then, if price trade eventually to the upside like this during the London key zone, which is this one you are seeing here, and this one, and then act as a smart money reversal here, which means break market structure at this level. Come on, guys, this is what we are talking about all this while. What is stopping you? So the moment you see this during the London key zone, I said, the market has changed direction on lower time frame, and during the zone, then that means, of course, we can trade this reversal because the target of the day is already taken out, and then there's a reversal. And one more thing as a trader, if you don't like trading reversal, like personally, I love to trade more of continuation. If you don't like trading reversal, this can help you to avoid trading that day because imagine you are buying because it's obviously the market is pushing up. Imagine you are buying and then the market form a reversal like this and the target of the day is taken out. Come on, that will trigger more fear for you. So it's either you avoid or you engage it. All right, that's how to work with this strategy. And I've told you guys everything. What I need from you guys now is come back to your chart like this, observe the days of reversal, go back to your lower time frame, open it up, and then check everything I'll be teaching you guys, see how it operates, how it unfolded that day, and then backtest it back to back, back to back. Then once your confidence rate, because backtesting is what leads to confidence, once your confidence rate is high enough, then you know that okay, you can actually work with this strategy. Then put it to work, put it on your live account, and you guys are going to make money from it. So I believe this video obviously has been insightful and helpful to most of you guys. So if you are new here, make sure you subscribe, turn on the notification button on. I'll see you guys next upload. Peace.